Assalamualaikum warahmatullahi taala wabarakatuh. Okay, welcome back, student, for this opening semester of the COVID-19 semester. So I want to explain on the continuation of the chapter 4, and I hope every one of you are well and ready to start the semester back. So this one is about the planning for the success budgeting, whereby I already believe that I already explained a part of the chapter during the semester before the break. But however, because some of you maybe already forgotten about what we already learned last in the class, so I would like to explain again from the beginning of the chapter. So through this record, you can try to review back, remember back what we have learned in the class. Okay. So this chapter is about the plan on the financial management, the plan, the implementation, the control, and measure, result, and report. This is what we're going to learn for this chapter. So next, slide number 3, we are slide number 3 explain on the planning. Yeah, slide number 3. What is the planning of the budgeting planning over here? So this means that how the organization establish the mission of the organization. What is an example of the organizational mission? I think I already asked in the class before. You have to learn what is the mission of the organization through open the website of USIM and try to understand how USIM as an organization put a mission to achieve, and what kind of achievement must be in line with the standing of the organization, whether it is the NGO, education institution, or other organization. So in this planning, it's supposed to develop a strategic plan to meet that mission. So how we want the organization want to meet the mission of the organization, they have to develop a strategic plan. And what is the strategic plan? It is a broad set of organizational goals and the primary approaches for reaching them. So how we underline the strategic plan and how the organization would like to achieve the goals of the organization. So from here, the organization should set a long-range plans to achieve the goals that has been defined in the strategic plan. So at the same time also, organization supposed to prepare a budget that show how management expect to obtain and use the resources needed to meet those goals. So to meet those goals, they have to prepare the budget, because without the budgeting, how the organization want to move forward, how the organization want to uh, create their activities and run the activities accordingly. So this is very important of the budgeting. So next is the master budget. So what do we have to understand about the master budget? So the master budget here means it incorporates and it summarizes also all the budget elements for the coming year. So whatever the budget that include to run the organization must be stated in the master budgeting. So these elements provide the specific detail to accomplish both the routine ongoing activities of the organization and the coming year's portion of the long range plan, and what kind of the plan for the next year activity. What we call it long range because consider 12 months of the operation. So this is what included in the master budget. So the main element of the master budget, sometimes called the comprehensive budget, are the operating budget and the financial budget. So the operating budget presents a plan for revenues and expenses for the fiscal year. So it poses the question, do we expect to earn enough during the budget period to pay for the resources we expect to use during the period? So do we earn enough? So because we want to use for a 12 months period, do we earn enough? Because if we plan the budget that is more rather than what we have, that is very dangerous because the organization have no capacity to to create their activities or to run the activities because they don't have enough budget for that. So it must have the sensibility whether what you have and what you plan. So the financial budget includes a cash budget and a capital budget. So it should include a cash budget and also a capital budget over here. So next slide. It's about revenue and expenditure. So what is revenue? Revenue is a pendapatan, expenditure is perbelanjaan. So what you earn, what you spend. So operating and cash budget provide estimate for the organization various types of revenues and expenses of expenditure. So it has a various type of the revenues and expenses or the expenditure. Expenses is the same like expenditure, okay? So example here, hospital. The major source of revenue in the operating budget like patient revenue. Patient revenue whenever they pay the bills for the hospital, donation from the other organization, from the any foundation, investment income, gift shop, cafeteria. So this is all the revenue for the hospital. And for the city council, major source of revenue, example here like a real estate tax, state aid, sewerage tax, other users fees. So for the city council, this is example of the revenue. There's a lot more. And for the meals for homeless, major sources of revenue, donation, grants, government aid. This is the major sources of revenue for the NGO like this. And for all three types of organization, the typical expenses are salaries for their workers, supplies for all the goods that they need for the activities, and also the rental. So the next slide, um, explain more about the revenues. Here, the revenue measures the amount of resources that have been received in exchange for the services that the NPO provided. So how you gain the revenue, what you provide, sometimes you got the revenue, sometimes you provide without earn any revenue. So one must consider all possible sources of revenue or other support. So over here, to make sure the NGO and NPO have the capacity to sustain the services for their organization, they have to plan for what kind of revenue for the coming year, because the coming year budget also coming from the coming year revenues rather than what you have maybe not enough for the existing year. So one must consider all possible sources of revenues. And revenues can be calculated by predicting the volume of goods or services to be provided and their unit price. How many you need and how much the price for one quantity of the goods. So multiply the price per unit by the volume of units provides the organization with an estimate of its revenue. That is a simple calculation. You provide, okay, how much per unit and how many the quantity of the unit, then you get the direct amount, how much you need for maybe one activity. You need a few goods and that include in that activity. So in preparing the revenue budget, it is extremely important to consider all possible sources of revenue or support. So in addition to tax or charges for services, these sources might include ancillary sources such as gift shops revenues, restaurants, endowment income, gift or grants. This is normally the sources of revenues for the NGO or NPO. Next, the budgeted expenses of the organization are subtracted from the budgeted revenues to determine whether the planned projects a surplus or deficit for the coming year. So how we want to see whether the planned project is a surplus or deficit. If we spend more rather than what we have, of course, we are having deficit. But if we spend less rather than what we have, of course, we have a profit or a surplus. So this is a very simple and straightforward observation. Okay. So in some organization, revenues are only acknowledged or recognized by the organization when they are received in cash. And in those cases, expenses are only recognized when they have been paid in cash and they are said to use a cash basis accounting. But basically nowadays, all organization is not using a cash basis accounting anymore, but they're using a accrual accounting that allows the organization to compare the money that is entitled to receive, because some of the money, sometimes the grant from the government not received in this 2020 but we receive in 2021, for example. So this is what we call, we already put the budget in our next year but the money is still not coming, we call it accrual accounting. So that the money is entitled to receive for this year's activities to the cost of resources used up carrying out those activities for the coming year. Okay, next. So this is an example of the budgets. So in the budgets, normally what we have in the master budget, operating budget, revenues and other support, expenses, cash budget and the capital budget. And there are special types of budget: special purpose budget, performance budget, flexible and zero-based budget. So this is a very simple budget for you as a dakwah student. You have to understand a very simple budgeting. And I believe when you involve in the clubs activities, in the student activities, you always do this indirectly, a simple budgeting that you know how to make the program successful because in earlier you already table up the budget that you want to use. So this is similar whenever you work in the organization, NGO or NPO or in any profitable organization. Okay, the operating budget. So operating budget, normally revenue and other support. What they have, revenue and other support is a forecast of resource inflows into organization. So what kind of source inflow in the organization? We call it revenues. So revenues are earned from the sales of goods and services and the receipt of contribution and grant. Okay, whatever you selling, contribution or grant from any foundation, that is called revenues. And support, what do we mean support here? Support refers to the contribution and grant. It's not from the sales of good. So, but revenues cover all the sales of good, contribution and grants. It covers all. But if I mention support only, it means that it's not coming from the sales of good, but it only coming from the contribution and grants from the government, for example, from other foundation, for example. Yeah, this is called support. So revenues will cover all, so whether from the support and also from the sales of good. Sales of good, how the sales of good? Like I mentioned before, from the small gift shops, yeah, from the jumble sale, that is the sale. Expenses represent the resources that an organization uses up in carrying out activities. So whatever you use the money to do an activities, this is called expenses. A surplus or profit is the excess of revenues and support over expenses. So how you gain a surplus? If you have more revenues rather than expenses. So this is called surplus or profit. Deficit or loss, when you spend more rather than what you have, of course, that is called deficit or loss. Okay, next slide. This is example, a very simple example of the operating budget example. In the revenue, okay, over here I put donation 97,980,000, gift shop revenue 120,000. This is per year, okay, and endowments earning 50,000 and total revenue 98,150,000 for organization. This is operating budget example for a year. So expenses that they need, salaries for their staff, 78,900,000. Supplies, 15,400,000. Bad debts, 2,200,000. Interest, 400,000. Rent, 3,100,000. And total expenses altogether, okay, total up to 100 million. So 98,150,000, the total revenue minus the expenses, 100 million. So the losses here, 1,850,000. So whenever I put in the bracket, it means the losses. Whenever no bracket, it means the profit. So is it normal for organizations sometimes suffer the losses? Yes, it is normal, but supposed to be avoided. Yeah, because whatever the losses or deficit that the organization suffer, they have to work again to make sure the year after that there is no deficit. Otherwise, who want to pay all the deficit for the organization? So as a good plan in the master budgeting for the operating budget, we have to avoid the deficit. Okay, next. This is the simple example of the activities for the NPO or NGO. This is strict for the lawatan antarabangsa for the organisation. For example, 50 people will be involved in this project, and per person they need 2,500 ringgit, and the total suppose for this project 125,000. So over here it happens there are uncollectibles from the member. So the uncollectible fees amount here 3,750. But they also do the fundraising activities, 50 people, and each of them have the amount of 250 for the fundraising. So estimated they earn 12,500 ringgit over here. So total receipt 121,250 plus 12,500, it total up 133,750. So this is all the total for the money for this trip. Okay. So next, we can see here the expenses that incurred in this trip. Okay. So with the 50 participants, and they have 4 people that chaperone together the student, and they have also to sponsor those chaperone that go together to take care of the safety of the student, 4 of them. So over here, projected payments that they put, okay, 50 student plus 4 chaperone. So chaperone means that the teacher that go together to take care of the student. Okay, 54 people, airfare 600 per person. So the amount here 32,400. Hotels for 50 people, multiply 600 per person, 30,000. So chaperone salaries means that the teacher, they do not pay any salary because they are volunteers. Okay, the hotels only for 50% because the teachers pay their own hotel. And food for 54, multiply 600 is 32,400. Admission fees to all the center that they want to visit, 54 people, multiply 125 ringgit. So it becomes 6,750. And guide, they also use one tourist guide during the visit. So guide per person 3,000 ringgit. And local transportation involve the buses that they use to go here and there, 2,500 ringgit. Entertainment, they go to the a few entry for the entertainment, 54 multiply 300, 1,600, 200 ringgit. And other for activities, 200 ringgit budget, 54 multiply 200, 10,800 ringgit. So and contingency, 2,500 ringgit. So altogether, over here, it is 136,550. So the money they earn only 133,750, but they expect the expenses is 136,550, whereby the surplus, the deficit here 2,800. So it means that they are having deficit. So if they want to properly balance up, no deficit, they have to look through again for this budgeting and see whether is there any part that they can reduce to make it better budget, no deficit. Okay. So let's have a look on the budgeting format. We have the line item or object of expense, such as salaries, benefits, supplies, rent, and we have also responsibility center, units for which individual managers are held accountable. Example, custodial services, maintenance, public relation, development, ticket sales. So this is according to the center. Program budget, according to the program, include both revenues and expenses for the ballet, opera, philharmonic. And generally, both responsibility center and program budgets are supported by line item detail. So for the program budget, for the responsibility center, what you're supposed to know is the line item details. They must have the salaries, the benefits, the supplies, the rental, utility, and everything. Okay, we can look through from the example over here. So we have the very simple example here, line item operating budget. So what is in the operating budget line item? The items that usually included in the budgeting. So the revenue here is net patient revenue. For the hospital, net patient revenue. The patient that pay for their fees to the hospital, 97,980,000. Gift shop revenue, 120,000. Investment revenue on endowment. The hospital have the endowment that they invest previously, 50,000. This is per year. So total revenue per year is 98,150,000. So expenses for the hospital, salaries, 78,900. Supplies, 15,400. Bad debts, salaries, 78,900,000. Supplies, 15,400,000. Bad debt, 2,200,000. Interest, 400,000. Rental, 3,100,000. And total expenses of everything, 100 million. So they suffer a losses here, 1,850,000. So still a loss, but this is the real expenses incurred. This is an example of the line item operating budget. Okay, so this is normally the revenue and expenses that incurred in the operating budget of the organization. So you might as well look properly what is the item normally included so that you understand how the organization running through their operating budget. Next, responsibility. This is an example of the responsibility center. Okay, responsibility center expense budget. So this is responsibility center, a small center budgeting, a small center or unit budgeting. So for example, this is an example for the hospital, radiology department, a radiology center. For example, for the year, they need 13 million. Nursing, 10 million. Pharmacy, 5 million. Laboratory, 7 million. Operating room, 50 million. Administration, 15 million. And altogether, total 100 million. So this is the budget, okay, that they they always incurred in the responsibility center for the hospital. Okay, next. This is example of the program budget. Program budget include both revenue and expenses for the major activities of an organization. It helps managers focus on sources of profits and losses of programs that could be expanded or discontinued. So whenever we do the budgeting on the programs, so still this is the hospital program, we can see what suffer the most losses in the program, whether the hospital want to continue the program for the coming year or they want to discontinue the program because they suffer a lot of losses, and then the hospital think maybe it's supposed to be better to discontinue, not to suffer so much losses to the hospital. So over here we can see the revenues for the oncology programs. They have the profit of 3,000. Rhinoplasty, they suffer the losses, 8,850. Cardiac, 4,000 profit, and total losses here is 1,850. So rhinoplasty is the most program that suffer the losses. So maybe over here the hospital will make a decision or think whether they want to continue this program for another financial year or not. So this is for the management of the hospital to think and then make a decision of the activities of the program. Okay, next, functional budget. So this is functional budget. Functional budget focus on the major functions performed by an organization. This format is often used to report to outsiders. And then it got the line item detail. So what is the functional budget here? Functional budget here is the program services and support services. In hospital care, clinic care, general and administration, this is the function of the hospital. The program service, they have the in-hospital care and clinic care. Support service, they have general and administration. So we can see here in the functional budget, in-hospital care salary is very high because they have to hire many nurses at night, 24 hours according to the shift. So it involves a lot of money, 60,000, supplies 11,300, rent 2,500, and others 2,300. So it total up 76,100. But for the clinic care, it is not much because for the salaries only 13,700 because maybe they open from 9 o'clock to 5 p.m. only, and supplies also less because not so many patients in the clinic care. And for the support and service, general and administration, so salaries 5,200 because this one also from 9 to 5 only, and supplies 1,000, rent 100, and other 100. So altogether is 6,400 only. So total up altogether is 100,000 total for the program service and support service. But looking at the functional budget, the management of the hospital can see how much money goes to the program in hospital care and program service for the clinic care and the support service for the general and administration. So from here, they can have a look. The most budget goes to which function of the functional services of the hospital. So if they want to restructure on the functioning, on the addition function, they can have a look through on this functional budget. Okay, next, flexible budget. So organization often experience more or less volume than budgeted. So sometimes we budget the quantity, but it might be less or it might be more. So flexible budget look at expected revenues, expenses, and net income under different volume. So the flexible budget, we can see the expenses or net income under different volume. If we use this quantity, how much the budget? But if we use more quantity, how much? Or we want to add more, or we want to cut less the quantity, so we can have a look. So the key to flexible budgeting is the identification of fixed costs, which do not change with volume, and variable costs, which do change with volume. So we have to identify which one is the fixed cost, which one is the variable cost. Then from here, we can adjust accordingly for the flexible budget. We can adjust accordingly with the flexible budget and the volume of the goods that we use, the quantity of the good use. So this is a very simple budgeting, the flexible budget. Not so much difficult, but students supposed to know how to prepare this. Especially you want to implement it. So this is a very, very practical, very easy, but you're supposed to know what is the fixed cost and what is variable cost first. So flexible budget results are normally shown in side-by-side columnar format. A flexible budget is a form of what-if analysis. So we prepare this flexible budget, we can do the what-if analysis. What if we reduce? What if we add more quantity? Basically, this is a simple, but it's a good analysis to do. So next, flexible budget example. Charity club sponsors a 3-day youth camp in Sungai Kenali Park. For example, charity provides a 500 grant for the event and collects 130 ringgit from each camper. The camp director expect 40 campers to attend and anticipate the following expenses. So the participation, we expect that 40. So this is the expenditure that include together with this program. Campground fees 350 for 3 days. Bus transportation 1,225 for 60 rider capacity. Equipment rental 40 ringgit per camper. Meals 65 ringgit per camper. So provide a flexible budget assuming a 10% increase in the number of campers. So how you provide a flexible budget? With the assumption that there is a 10% increase in the number of campus, for example. Yeah. So let's have a look how we calculate this. So the revenue, 40 campus and 44 campus. 10% is 44. How we get 44? 10% multiply 40 equal to 4. So the extra is 40 plus 4 equal to 44 campus. So it means that 10% increase is 40 plus 4 campus. How we get the 4? 10% multiply 40 equal to 4. Okay? So this is how we make a budgeting if 10% increase on the participant. What the question say just now? If 10%, assuming a 10% increase in the number of campus. Number of campus, the participant that want to join for this camp. Okay? So camp tuition, 5,200 ringgit. Camp tuition fees. Okay, with the how much per person? Camp tuition fees. How much per person? 130. 130 multiply 40 equal to 5,200. But if the campus increase to 44, 130 multiply 44 equal to 5,720. Subsidy. Subsidy is a fixed cost. If, whether it is 40 campus, whether it is 44 campus, it's just the same. It's not changed. So just now I say you have to know where is the fixed cost, where is the variable cost. Variable cost, whenever it change according to the volume of the participant, volume of the quantity, volume of the goods buying, for example. So over here, we already can identify which is variable cost, which is the fixed cost. So over here, fixed cost is the subsidy. Doesn't matter the campus is 40 or the campus is 44, the subsidy, the fixed cost is the same, maintained. But the camp tuition fees, whenever the campus are 40 people, so it is only 5,200. But whenever the campus are 44 people, it increased to 5,720. So it moved according to the number of people over here. So this is what we call variable cost. So total revenue over here is 5,700. So whenever it increase 10%, so total revenue increase becoming 6,220. So what are the expenses incurred here? Campground rental. Campground rental is a fixed cost. Doesn't matter the people 40 or 44, it is 350 for 3 days program. Transportation also is a fixed cost. 1,225, same. 40 campus also the same. 44 campus also the same. Still 1,225. Equipment rental. Equipment rental, how much they have to pay for the one person? 40 ringgit per camper. So equipment rental, whenever 40 people, 40 multiply 40 becoming 1,600. But with the 44 campus, the equipment rental increased to 40 multiply 44 equal to 1,760. Meals. So equipment rental is a variable cost. Meals. Meals fixed cost or variable cost? It is also variable cost. So whenever the 40 campus, the meals is 2,600, but with 44 campus, it increased to 2,860. And total expenses for the 40 campus, 5,775, and with the 44 campus, total expenses 6,195. So revenue for 40 campus, 5,700 minus total expenses 5,775. So they have the losses of 75 ringgit. But if they increase the number of the campus to 10%, there are 44 campus, they got the revenue of 6,220, and less the expenses 6,195, they got the surplus of 25 ringgit. So over here, it shows what kind of decision that you would like to do in this project. Of course, you don't want to suffer the losses. So 10% increase of the number of campus is much appropriate to do the decision in this, and then you have to find 4 more campus to include in this project, then you will not suffer the losses anymore. Okay, this is an example of how easy and simple by using the flexible budget to look on your project or activities for you not to suffer the losses. Okay, next. This is the meals for homeless flexible budget example. So this is example for the meals for the homeless people. Meals delivered for 35,000 people, and meals delivered for the 40,000 people, or to the 45,000 people. So revenue coming from donation and also from the city council. Donation for the 35,000 people, total revenue 157,500. For the 40,000 people, total revenue 165,000. And for the 45,000 people, total revenue 100, 1,172,500. So over here, what is the fixed cost and what is the variable cost? So the fixed cost here is the donation for the 35,000 people or 40,000 people or 45,000 people is still the same, 1,105,000 donation from the any foundation. But the city council give a different. Whenever the people for 35,000 people, they provide the grant only 52,500 ringgit. But for the 40,000 people, they increase the grant according to the volume or quantity of the person that will receive the meals. This is the meals for the homeless people. And the budget coming most of it from the donation and also the allocation from the city council. So you can see here the expenses that incurred in this project is salaries. Salaries also fixed costs. The same people we use, whether we deliver to the 35,000 people, 40,000 people, or 45,000 people. Supplies, of course, supplies is increasing according to the number. You provide to the more people, you have to get the raw materials, the rice, the chicken, the fish, vegetables, and everything more. And rental is the same. It's a fixed cost because you rent the same building, the same kitchen, and others expenses also the same. So total expenses is varies according to the number of the meals delivered. So the more you delivered, it increase in the number. So over here, we can see that total revenue for the 35,000 people meals delivered 150,000, 57,500 minus total expenses 151,500. So it is a surplus of 6,000 ringgit. So total revenue for the 40,000 meals for the homeless, 165,000 minus 164,000, still a surplus as well for 1,000. But if you delivered for 45,000 people, total revenue 172,500 minus the total expenses 176,500, it become deficit of 4,000. So over here, the budget that you have, that you are able to, maximize the delivery of the meals for homeless, maybe you can choose the 40,000 meals delivered, whereby you not suffer the losses, but you got the 1,000 surplus, but at the same time, you can maximize the delivery for the homeless people, but not to the losses side. Okay, this is how, whenever you prepare for the flexible budgeting, for the NGO, you can find out which one is the best budget or the best number of the revenues and expenses that you can use to deliver the services to the society and people. Okay, when you understand the flexible budget, I think this is a very simplest budget that you can use to plan your activities proper, and you not suffer the losses at the same time. You can maximize the utilization of the funds that you have, and maximize also to the people, that the target group that you already make for the activities. So I think this is all for the chapter 4, planning for success budgeting, and you can check out on this full slide in the goals, so that you can always refer to my explanation and the real slide in the goals. Okay, student, with that I end my lecture today with Assalamualaikum warahmatullahi taala wabarakatuh.